Hello and welcome. This is Business Incorporated coming to you live from Lagos. I'm Chibueze Obi Iwago. Coming up, more reactions continue to trail the MPC's July decisions as we get the perspectives of the international community. And Kenya's central bank governor says inflation is under control. Plus, Egypt close to agreeing an International Monetary Fund lending program to ease its funding gap and restore market stability. Well, we'll begin with some of the latest earnings reports coming in. Apple Incorporated's iPhone sales fell for the second straight quarter, although the 15% drop was less than feared. The company's total revenue dropped 14.6% in the third quarter ended June 25, also declining for the second quarter in a row. Apple said it sold 40.4 million iPhones in the third quarter, more than the average analyst forecast of 40.02 million. Apple had reported a 16.3% drop in iPhone sales in the previous quarter, the first decline since the smartphone was launched in 2007. And Twitter has reported its slowest quarterly sales growth in 3 years as the firm fends off competition from a growing number of social media sites. Revenue for the second quarter was up 20% to $602 million, far slower than the same quarter last year when it rose 61%. But the microblogging site managed to shrink its quarterly loss to $107 million from $136 million last year. The company also reported a 3% increase in monthly active users, an important metric for advertisers. And Air France-KLM has warned about France as a destination as recent terror attacks weighed on sales in the second quarter of the year. The airline group reported a 5% fall in revenue to €6.22 billion compared with the same period last year. Air France also joined other European airlines in warning of the impact from the high level of geopolitical and economic uncertainties. However, operating profit rose 138% to €317 million, partly due to lower fuel costs. The Air France pilot strike also reduced profit by an estimated €40 million. And Deutsche Bank has reported a small net profit for the second quarter. The result was a lot better than expected by analysts, but ongoing restructuring took its toll in securities, trading and other business areas. Germany's largest lender today reported a second quarter bottom line profit of €20 million. Net income dropped by a staggering 98% year on year, but the quarterly result was a lot better than expected by market pundits, who had penciled in a net loss of €100 million for the second quarter. Deutsche Bank's revenue were down 20% to €7.4 million for the period under review. Now let's talk more about those results coming in from Germany's biggest lender, Deutsche Bank. Let's cross over to Frankfurt Stock Exchange. DWTV Channels TV financial correspondent Janelle Dumalong is standing by to talk to us. Hello, Janelle. It's nice to have you on the program. Well, it's a week of earnings report. Apple, Twitter, and now we have Deutsche Bank. The bank has reported a small net profit for the second quarter. How are the Deutsche Bank's results being received?
Well, here at the Frankfurt Stock Exchange, Deutsche Bank share price has been dropping steadily, but as such, nobody is really surprised by the results. In the end, many analysts are even surprised, and we're expecting worse results than the ones we've got now, because the Deutsche Bank's problems have not been a secret. Their response has been obviously this massive restructure. They're cutting lots of jobs, thousands of jobs, and closing many branches, hundreds of them. And it's this restructure that's impacted the bottom line the most. So the general consensus is that the results are not good, but not as bad as expected.
Now, let's look ahead of the European Banking Association stress test that's due on Friday, July 29. Deutsche Bank's future seems shakier than ever. Is there really any reason to worry?
It depends on who you ask. Now, Deutsche Bank's issues are real. Just a few weeks ago, the IMF called it the riskiest financial institution in the world, meaning it posed the most global systemic risk to the global financial markets. It's also failed 2 U.S. stress tests in a row. Now, this time around, the European stress test will be a bit different. There will be no pass or fail rating. Still, the results will be able to show us which banks are the weakest, and all eyes will definitely be on the Deutsche Bank and Italy's suffering banks.
Okay, Air France-KLM has warned about France as a destination as recent terror attacks weighed on sales in the second quarter of the year. How concerned is the market about this warning from Air France?
Air France-KLM shares were up in early trading and flat again in early afternoon trading. And in the end, it's said that a decline in oil prices actually helped offset the sales decline, which was actually worse than expected. But you're right, of course, security is the main order of the day, and it's a problem that it shares with Europe's major airlines as well. Security affects them all. Lots of revenue is staying away. For example, it is travel peak season, and tour groups, for example, from Asia are simply staying away. And in Southern Europe itself, like Spain is turning out to be the preferred summer destination in Southern Europe as opposed to France. So Air France-KLM has a lot of challenges ahead of it, and it remains to be seen how they will overcome them.
All right, thank you very much for your time, Janelle. Janelle Dumalong, DWTV Channels TV financial correspondent, reporting there from Frankfurt Stock Exchange. Well, let's now move on to the Asian markets. Japan's Nikkei share index closed up nearly 2% on reports that the government will launch a 28 trillion yen economic stimulus package. The Nikkei ended the day up 281.78 points. However, in China, shares were hit by concerns that regulatory changes to some share trading were on the way. China's Shanghai Composite Index fell 58.17 points. Hong Kong's Hang Seng turned positive towards the close to end, up 89.26%. In Australia, the ASX 200 share index closed flat at 5,539.69. South Korea's benchmark Kospi index dipped 0.1%. And GlaxoSmithKline is to invest €275 million to expand its UK manufacturing sites, saying the country remains an attractive location despite Brexit. The pharmaceutical firm, whose chief executive Andrew Waite backed the Remain campaign, said the UK's skilled workforce and competitive tax system helped drive the decision. It said most of the products made at the expanded sites would be exported. The firm expects its investment to create new jobs. GlaxoSmithKline currently employs 16,000 people in the UK, 6,000 of which are employed in manufacturing. And Tesla Motors has unveiled its $5 billion battery gigafactory outside of Reno, Nevada, which the company is rushing to open earlier than expected in order to ramp up production of its Model 3 sedan. Speaking at the opening in the town of Sparks, the company's CEO Elon Musk said the company's master plan to broaden the electric vehicle maker's products line could cost tens of billions of dollars over time and would likely require a modest capital raise. The new plant is being jointly developed with Japan's Panasonic Corporation and could ultimately support 1.5 million electric vehicles a year.
Nevada is not paying for this facility. The 1.3 billion or so, which is the maximum tax incentive that Tesla could get over 20 years, so an average of like maybe $50 or $60 million a year, is a tiny fraction of what this factory's output would be. So at the 50 gigawatt hour level, this is like a $5 billion a year factory output. We think it'll probably be at least probably 3 times that number.
After the break, more perspective on the Nigeria's MPC July decisions. Do stay with us.